Something I've been wanting to do a video on for ages is my love of silver. For many years I've had positions in precious metals and it served me well when times have been tough, often giving me a buffer that was better than if I'd just saved cash. During the last financial crisis I had some silver and gold, and my silver performed much better than the gold did. And I didn't have that much at the time, and I always vowed that I would never make that same mistake again. One of the key things that I've kept an eye on is the gold to silver ratio. This is simply how many ounces of silver are required to buy 1 ounce of gold. For the longest time this was fixed at 25 to 1, and it's been at other ratios at various points in the past. But that no longer applies, and these days it fluctuates freely based on market forces. When the ratio gets out of whack, like 80 to 1 or higher, I take that as a signal that silver is getting cheap compared to gold, and so I start to stack silver. Later, when the ratio tightens to say 40 to 1 or lower, I trade that in for gold. This means I can get gold much cheaper than if I'd just gone out and bought it in the first place. This ratio is a key indicator when a crisis is looming, and so you see money flowing into gold first, which pushes the price up, so silver lags behind initially. Later, as more money sloshes about looking for a safe haven, it piles into what's left, which is silver. And then the price of that skyrockets too. So that ratio gets high, and it means that the people at the top are getting nervous with their money. So it was 98 to 1 when Hitler invaded Poland. In 1991, as the first Gulf War kicked off, it was 100 to 1. In 2009, it was 84 to 1, just after the financial crisis. By 2011, it was down to 31 to 1, but it didn't take long to start going back up again. By 2016, it was already back at 80 to 1, and by June of last year, it was at 92 to 1. This suggests that the greater majority of investors think that something is wrong. There were rumours swirling around for most of last year that something bad was coming in the economy. Even without the pandemic, people expected a crisis of some sort was brewing. Not one to let a good crisis go to waste, and determined not to repeat what happened before when I didn't have enough silver, I started to slowly stack. I usually buy two types of silver. One is the 1 ounce silver coins, and the other is 10 ounce silver bars. Some example coins would be silver maples from Canada's Royal Canadian Mint, and silver Britannias from the UK. Back in May, I gave each of my kids their first silver maples each, and they frequently asked for updates on the prices of what they're worth ever since. Back then, I paid $30 per ounce. Now, as the supply is drying up, they're almost $50 each. This is in Canadian dollars. So, they're well respected because they're very pure and they come from a government that is also mostly respected by other countries. But I also like the Britannias, partially because of my own personal bias, being British, but also I think they're quite pretty. And they're still an ounce of silver, but they actually cost a little bit less than the Royal Canadian Mint silver maples. I normally stack a little at a time, so buying a few ounces at a time is normally quite cheap. Obviously, with prices being what they are currently, it's not cheap right now, but every now and then, if there was extra money left over at the end of the month, I'd get a 10 ounce bar. Again, Royal Canadian Mint, because the bars are well known and respected, but sometimes I'll get other brands if they're on sale. And there really lies the heart of my methodology. I generally buy slowly and methodically with an actual long-term plan. I'm normally happy to wait for a sale. I also buy, as mentioned earlier, based on what the gold-silver ratio is doing, so I might back off sometimes and then jump back in again later. So, for instance, these bars here, these were picked up when the ratio was about 113 to 1. I've stopped buying now that the prices are going up again, but that was always my plan. My more recent rationale was that eventually this crisis would have a trickle-down effect where all of this printing of stimulus money was going to lead to an excess of cash that is losing velocity and is looking for somewhere to sleep. This generally means that, the world's money flies to gold. However, whilst it's doing that, it's ignoring the silver, meaning that the price of gold shoots up and silver doesn't. Hence, this ratio got up to something like 125 to 1 earlier in 2020. Later, the rest of the world's cash flies to what's left, which is the cheaper silver, and again, the price shoots up, closing that ratio. However, when it does this, it's much more violent than the price of gold going up. So what's my exit strategy here? Like, how long do I hold it, and what is my primary goal? Well, the primary goal is to simply swap this gold for the silver when the gold-silver ratio gets back down to like 30 or 40 to 1. However, if it doesn't get back down to that level, this isn't the end of the world. This can easily be just another rainy day fund. A third option is dependent on the future prices. If things go into to-the-moon territory, I can simply cash out, though that really is a last resort, basically due to taxation. Whatever the exit strategy is, I can say that it probably won't happen until 2021 or 2022 because there's going to be more stimulus packages, which means there's going to be more inflation as they inflate the money supply, and that cash is largely not going to be spent because everybody's saving. I know the why ahead of time, but I just don't know the when. And when that gold to silver ratio finally kicks back down to where I expect it to go at some point, I'll evaluate my options then. Anyway, I hope you found this interesting. If you want to see more, hit subscribe, and speak to you soon.